Welcome to the Clean Energy Gap. And first I want to congratulate you all for coming here and not going to see Kobe Bryant. So thanks for doing that.
I was very tempted.
Yeah, exactly. You defected.
Right great.
I was just telling John that one of the I'm Greg Dalton, host of Climate One. One of the funnest interviews I've done in the last year was interview Dusty Baker, manager of the Giants and Nationals. He is a clean energy investor, so maybe we can get Kobe to help with this this clean energy investment gap. Going from your left, Andrew Chung is the founder and managing partner of 1955 Capital. He previously was with Khosla Ventures. Lynn Jurich is a former VC who's CEO and co-founder of Sunrun. Andy Karsner is a managing partner at the Emerson Collective and was a former DOE official in the Bush administration. And John Woolard is VP of Energy at Google, and he was the founder and ran BrightSource, one of the largest solar companies, built, I think, the largest solar plant in the world at one time.
For a while.
So we heard Vice President Gore yesterday talk about a lot of the positive things that are happening, costs coming down, deployment up. We're here to talk about the $44 trillion investment gap, what needs to happen to get capital moving into clean energy. We know that a lot of the VC and early stage money is out, so we're going to talk about where's the money coming from. So Lynn, let's start with you in terms of where we are at this moment, celebrate this moment in terms of where we've come so far. Start us off on an upbeat in terms of the positive trends on solar.
Yeah, absolutely. It's been really a bright spot if you look at the energy sector globally. I think I went to the Wall Street Journal conference a couple weeks ago, and it was the very first time, I think, where everybody there universally, even the traditional energy CEOs, sort of just conceded that it's game over, solar is it. And if you just look at the new capacity that was built in the US in the last year, 30% of that was solar. So it's just, and some of the costs that we're seeing out here, you're just seeing plants being developed and bid out at 3 cents a kilowatt hour. It is without subsidy. And those cost declines are continuing at about a 10% CAGR, particularly in the business that I operate in, which is the distributed side. And what I'm most excited about, which we'll get to, I think, in a bit, is what's happening really to move and completely change our energy infrastructure from centralized, one-way flow of energy to local, distributed resources. The solar plus storage thing is real, it's happening fast, and it has the potential to completely shift how our energy is delivered and regulated.
Fabulous, but the scale is something, lots of good news happening. The scale, John Woolard, is something that's just kind of hard to get our mind around. Even if we put rooftop solar everywhere, it's only 5% of what we need.
Yeah, I mean, I think the answer to scale is we need a lot of different categories to all succeed. So when we think of it, we back solve for 450 parts per million in 2050. What are we really trying to do, which is a carbon minimization problem. How do you do it? You need a lot of wind, a lot of solar. The grid's going to change, the dynamic's going to change. And you mentioned a $44 trillion number, which is a big number. The good news in that is, I'm not sure exactly where your 44 trillion came from, but I've heard versions of it.
And that number,
about 30 trillion needs to get invested if we were just to build the same fossil infrastructure, the same infrastructure. So there is an incremental investment that's got to happen to really fully decarbonize, but it's not 44 trillion fresh, it's an incremental $15 trillion. That's still a lot of money. So how do you do it and how you think about this scale is fairly daunting. The number I thought that was interesting was we've done about $1 trillion so far of renewable or zero carbon investment. So that's project financing investments across the category. So we've already deployed about $1 trillion, and we've started to make some progress, and costs are coming down. And there's some issues to wrestle with that I'm sure we'll get into around reliability and dispatchability and how you integrate. But the good news is everything's heading in the right direction, but it's not going to be easy.
Andy Karsner, Emerson Collective was founded by Lorene Powell Jobs. She's the largest shareholder in Disney. So tell us what Emerson is doing on sustainability and energy.
Well, at this moment, Emerson has been investing in a basket of social entrepreneurs that, along with its ethos and core themes in education and immigration, are relentless in their entrepreneurial capacity and passion and drive to achieve innovative disruption. And so we're simply enlarging that now that I'm going to be part of Emerson Collective and a wonderful team there. We're enlarging that to incorporate that same methodology into energy technology, sustainability, et cetera. But not without unambitious goals that we can be a little more proactive in pursuing and celebrating. Sort of audacity with a degree of humility is where we try to live. So we want to see it be the case that in my lifetime, not my children's lifetime, that every human on Earth has access to clean, sustainable energy that can help bring light for literacy for women who work too hard in the day and don't have that extra hour at night, or to clean potable water. So we think of what we do as part of the global village, but we also think of what we do from a humanitarian perspective for communities, in particular low-income communities, with a dramatically changing social compact that has existed in this country for a very long time for ubiquitous, affordable, reliable electricity delivery, and is now shifting because of technology and because of the imperative to clean that technology mix. It's changing the way that that's distributed, and so it's wonderful. And I'm with Elon later this week and Tony Fadell, and we celebrate sort of the access to new tools and new technologies and cool tech. But you will traditionally find a Tesla parked closer to a Range Rover than to a beat-up old Volkswagen Beetle, and we need to get to the center of the bell curve and ensure more ubiquity and accessibility by the people who can and need to benefit most from this clean energy revolution. So we don't want to see the microgrids only in Atherton. We want to see them expanding as fast in East Palo Alto and Detroit and Cleveland and Oakland and other places like that. So that's a sampling sort of taste. I think we have broad latitude. I was thinking about your debate over 15 trillion versus 44 trillion. After the first trillion, who's counting, kind of thing. There's a compelling need to move private capital, not to solve in and of itself from either a philanthropist or a for-profit or a corporate balance sheet, but to catalyze those financial mechanisms that can yield the enormity of scale. And this is something John did very successfully, at BrightSource, that allowed him to build, at the time, the world's largest solar facility. And so we need more of that financial engineering at scale to be commensurate with the technology disruptions that are enabling us to try out and diffuse these models that, like Lynn has been accelerating into.
Thank you. Andrew Chung, is there money to be made? You've spent a lot of time in China. Is there money to be made in what Andy's talking about, bringing access to people who are off the grid right now? Is that something that capital is going to flow to without a lot of government intervention?
Absolutely. And I think before that, I'll also give my own view of the optimistic possibilities in investing in the clean energy area. So more than 10 years ago, when I first started to tell my LPs at Lightspeed Venture Partners why we should be starting the journey into clean tech investment, I presented several points that, interestingly, more than 10 years later are still valid today, and actually much more valid even more than 10 years ago. Multi-trillion-dollar markets, so I didn't pin it down to a number, but I did talk about it as a massive, massive market opportunity. I talked about the incredible advancement in technology over the last 20 to 30 years in every one of these sectors. Solar costs 100 times less than it did 30 years ago when the cells were invented, which has dropped the cost and improved the performance dramatically. The same can be said in the battery industry, in LEDs, and across the board in the whole portfolio of the clean energy solution area. Yet there's still significant headroom for improvement, which VCs and investors love to hear. In nuclear, still a lot of progressive movement that's needed there. In battery technology and solar, there's still room to improve efficiencies and drop cost and improve performance. Investors love that. Also, the inexorable improvement in social and corporate political support around these areas is unprecedented. In 2014, obviously, China for the first time came to the table to talk about carbon reduction, which is in a seminal event in the history of clean energy. And Paris, just even in the last few weeks, a lot of the developments there are incredibly important. So if you add all of these factors together, the perfect storm of energy around making improvements in this area, I think are very optimistic. Just to add to John's comment about the portfolio approach, when I was a general partner at Coastal Ventures, obviously we had the largest clean investment clean energy investment portfolio in the world with a lot of diverse solutions that were all trying to tackle this problem. Solar is a very important part of the solution, but not the entire solution. If you look at the famous McKinsey study that talks about the different wedges and slices of opportunity for carbon reduction, you'll see that improvements in all of these areas and investment in all of these areas, whether it's solar, energy storage, energy efficiency, carbon reduction, biofuels, bioenergy, the whole broad gamut needs to be a part of the overall solution if we're actually going to get to the types of targets that the world now is heading towards in 2030 or 2050. So overall, I believe that the industry is at a very interesting tipping point. A lot of great progress has been made, and it's important that folks continue to be optimistic about the area. Now, that all being said, it is a very challenging environment. VC has pulled back dramatically. A lot of the firms that have been looking at this area and investing in these areas have been pulling back and kind of flying to where the hot stuff is in TMT. A lot of the corporates have been trying to support the area, but have still had difficulties in grappling, the more earlier stage technology developments. A lot of the government support, which I think with folks like Andy and a lot of the leaders in the DOE pushing forward, we've made great advancements there, but yet it's still not enough. And so there is a significant clean energy investment gap in the United States. You have partners that are being shy about working with earlier stage companies or even larger companies like Sunrun. You have folks that are very squeamish about investing because they're not sure where the returns come, and it's created a very difficult environment for a lot of these companies. And so where 1955 Capital came in, and I recently launched the firm after 5 years with Vinod Khosla and Khosla Ventures, really to think about how to reinvent investment in venture capital and growth equity to be able to address this issue. How have the failures in the last 10 years in venture and growth investing, how could those be addressed with a new model? The answer is China. The answer is China. 2013, China installed more solar capacity in 1 year than the US had in its entire history. Wind power, same thing. You could talk about the statistics for how fast China has been able to exponentially grow their wind capacity. These are mind-numbing numbers. And why is that? 1.6 million people, according to the government, die every year prematurely of air pollution-related disorders. That's like if 1/3 of San Francisco just fell over every year because they bothered to breathe the air. You have 300 million people who don't have potable drinking water. India has the highest incidence of chronic asthma. 25% of the soil in China is not of the quality where they can farm it. So there are desperate issues in places like China and India, Southeast Asia, Africa, Middle East, and lots of money, capital, government support around supporting this.
So Andrew, do you mind if I do a conversant thing?
Yeah.
Because you brought up a couple things that I think are really important, right? And one of them was you said the word nuclear, and the panel says clean energy investment gap. And I think many people in this community, many people who tackle these problems, need to determine, is nuclear clean energy or not? Okay, because we're really having a discussion about a renewable energy investment gap, and that begs the question of what are we trying to solve for? Because if we're trying to solve for climate or for particulate air emissions or PM10 or some of the other things you're talking about that are compelling China, I'm not sure, although I am a huge advocate of wind power as a former wind developer and solar as a solar investor, I am not sure we are not confusing correlation with causation when we talk about how many wind turbines in China begin to arrest asthmatics in Shanghai, right? I mean, nobody has shown me the study, and I'm not even sure there is interest in the dialogue of how fast coal emissions are being retired relative to the amount of proliferation of renewable energy investments and technologies. So if we're trying to solve for how many parts per million in the atmosphere over what period of time, and we're not having a discussion about how to deal with toxicity on the back end of the nuclear fuel cycle and how to stop tearing down gigawatt-sized emission-free power sources, or how to deploy new technologies in nuclear, or how to arrest and separate emissions and get rid of them from the amount, because don't forget, it's the same China that built a coal-fired power plant a week for almost a decade, right? And so the idea that they're going to atrophy or depreciate those assets just because they're building as rapidly in solar and wind, I think is not the right paradigm. So we've got to get our heads around what are we trying to solve for? Because if it's greenhouse gas emissions, having exclusively a discussion on investments of renewables is only part of the story.
Nuclear
And
needs
by
to
the
be-
way, doesn't India have 10 times the coal as China? I mean,
India,
it's
China,
significant.
Russia,
Yeah.
you know, I don't think you address this without dealing with that.
And China's easing off their coal. India,
are
not,
easing.
not so much.
Right.
I would like to ask about how the context of cheap oil affects all this, and if we expect a rebound in oil prices. Brown's been really cheap. You know, Lynn, that's kind of beat up green. How are the dynamics there? Is cheap oil really hurting renewables?
You know, what drives adoption is really more investment in the transmission and distribution grid for my business, and that's something that I think is really important for us to understand here. I'll answer your question, but let me just take a step back and say there's been a lot of global utilities who have come to visit our office, you know, big, you know, $50 billion utilities who have come and said, you know what, we believe that the traditional investment in centralized generation and transmission is over. We believe that it's all moving to distributed. We believe that the companies in Silicon Valley and California are figuring out these business models to think about how this actually works. And then we're going to be able to export that into our developing markets. And it's going to be the phenomenon where we can skip some of the investment in landlines just like we did and invest more in the cell phones and the cell towers and not invest in the old model. And I think that is really, you know, very, very fascinating. And the reason why our value proposition is so strong at the consumer level, at that rooftop, is that power is very expensive. So despite the fact that natural gas is at an all-time low and oil is down, consumers have only seen rates escalate. And in this country, we're going to have to spend $2 trillion on transmission and distribution infrastructure. How do we recover that cost? That cost is going to come through with consumers paying higher and higher and higher rates. Well, now it's cheap enough for us to put solar panels on a consumer's roof and save them 20 to 30% day one on their electric bill, day one, with zero upfront cost in 15 states across the country. So we've done that we have about $4 billion of that just in the US. So the US has actually crossed over 1 million solar homes this year. That's more than double electric vehicles. So you hear a lot about electric vehicles. Electric vehicles are only 400,000. We're at 1 million solar homes, and that is not stopping. And so these global utilities figure out, okay, we love that model. We think that's the way that we can really get there in our developing markets is with this, you know, local distributed, and so we want to learn from you. And if I would just add, you know, quickly, storage is getting to be very interesting. Andrew mentioned it, and you know, a couple years ago, we would have, I think, all said that's far out. You know, that's a 5-year out plus. Type of solution. We're doing it now. So in Hawaii today, which is our first market because power in Hawaii is the most expensive, we have already installed PV plus storage at zero cost to the consumer, cheaper than the grid power. And there's the cost declines that we're expecting to see in that storage, and that combined with that rooftop solar is going to give us a lot of options. So I didn't totally answer your oil question, but the pressure is more in the transmission and distribution on the end consumer price.
We'll come back to oil, but Nevada is a very different story. The solar industry just got kicked out of Nevada because the centralization empire clawed back.
Yes.
So address that, and I'd like to get John on this too, because you built the big centralized power, but the utilities hate it because they think it's a threat, and so I'm not so sure that it's a decentralization is quite as a fait accompli as Lynn just said.
Well, I think it depends. It will be. What all Nevada did was block it for 5 years. No. We don't even have to win. So what'll happen? There's some very interesting research that shows. Within 5 to 7 years, PV plus storage will be good enough to go off grid, to take a customer off grid. And by the way, there are other solutions with gas. Could you use a generator? Could you figure out other ways to solve this problem to just totally defect from the utility? That is the worst scenario for this country. And so I think the good policymakers are starting to see, okay, what we're doing, what we're at risk of doing in Nevada here is we're building out 2 infrastructures. We're building out a redundant infrastructure. We have all this stuff where private citizens are building it out on their home. And by the way, you're not going to stop that. You're not going to stop consumer choice, innovation, technology on the home. It's just what we talked about yesterday. This is the age of consumer empowerment. Utilities don't know what their customers want. And so you're not going to stop that. What we're doing now, though, if there's a policy like what happened in Nevada, is just let's make it so cost ineffective for consumers to put this rooftop solar up that we just pause this business for 5 years until we hurry up and get our costs down further. Then at the same time, we're building out all this transmission and distribution and infrastructure we don't need. It's setting the state up for much worse stranded costs. Now there are they have Warren Buffett behind them. There's powerful people, trying to protect the incumbent industry.
Warren Buffett versus Elon Musk in Nevada.
Yeah.
John Willard, centralization dead? Or does Google see a place for some centralized power going into your data centers, et cetera?
Yeah, well, so first, just to set a little bit of the background, we are one of the largest, we're the largest corporate buyer of renewable power in the world. So we've done about 2 gigawatts of power procurement for our data centers. We're also the largest investor that's not a utility in a lot of these various technologies through projects. So we see a lot of the different ends of the spectrum. We buy a lot through the grid. We also have done quite a bit of work investing in things that are more remote and distributed. And frankly, the answer is somewhere in the middle. There's not, and because we're actually, if you think about it, this is a network problem, and networks don't go away. And the cell phone analogy is tough because cell phones still require other cell phones to talk to have value. You don't sit there with your cell phone and just play games. You actually interact with other people, and so it's a network effect. Whether it's wired or wireless is just a factor of what's transmitting those bits and bytes. But at the end of the day, the power of networks is very, very interesting. So with that, where the network's going to go is a very interesting question. So will it be, and I would debate a little bit, if you look at going completely off grid, is that for 1 day or for 5 days? Can you handle 5 days of rain and that type of thing? So it gets really complicated when you want to sever completely from versus just handle a day of usage. And I think sometimes people kind of gloss over that sometimes. So I do think that the network is going to change. It's going to become more dynamic. It's going to become more bidirectional. You're going to have zero carbon power injected at places that we haven't even thought about in the system. You'll see coal plants retire and have other things that are going to be dispatching into those injection points. It could be wind. It's hard to beat wind that's $30, right? That's a pretty, and even 20. So so you'll see some transmission built. You'll see the network enhanced. You'll see more storage. But with storage, if you think about what storage does, is it helps pave over a flaw in the system. So that means storage doesn't generate new electricity. So we don't have a storage maximization problem, we have a storage minimization problem. We want to have a portfolio of assets that generates power and demand that can flex when possible. And you want the least amount of storage strategically placed through the system. Otherwise, it's like having a sloppy supply chain or having inefficiency on the system. So storage in a way is a proxy for something that's not quite been figured out right. So you don't want to put it everywhere because it does add cost without generating work.
Supplements the grid, doesn't replace the grid. Andy?
Yeah.
Yeah, I agree with John, and not just because we're both Googlers. So full disclosure, and I think going off grid, which I like sort of the Jeffersonian romanticism of that, but it's a bit like being off road, right? It doesn't mean you're going to get rid of the highways just because you enjoy the pleasure of mountain biking and going on your own for a bit. And so this is really not an if or, this is an if and. The technology is compelling reasons for massive growth in distributed generation that is providing us with a societal good of cleaner and more cost-effective resources that we need to embrace by what Fred Krupp in one of the earlier sessions called, getting out the underbrush of legacy and antiquated policy that is an impediment, right? So we need to clear the things that are in any way impeding something that is good for society, good for our economy, good for the companies that participate, et cetera, right? That's not the same as calling for the end of the grid or even saying that really, the grid, if you think about it, using the analogy of the interstate system, or play with the telephones if you want, this is one of the great commons. This is one of the great things our country has done enormously well. And we have done it in a hodgepodge patchwork kind of way and brought it into this, a ubiquitous network. But now the idea that we would walk away from it because we can augment and supplement it with new and exciting technologies is the wrong thinking. What we actually are lacking in the discussion, because it is a discussion of the interest of Mr. Buffett's Mid-American versus the interest of a tech company and their stock price, et cetera, is a national strategy. And the market participants from the ground up cannot make a national strategy. So we need something anything to come from Washington other than sort of rah-rah support for good technologies. We need a larger, comprehensive framework that takes us 10, 20, and 30 years out to say this is the direction we ought to go, and these are how these things coexist, and this is how we maximize large pockets of remote, available, renewable resource like what John built, like the massive wind in West Texas, like the geothermal in the north of Nevada. How do we bring that online intelligently as part of a grid that provides for everybody affordable, reliable power that is now clean and reducing greenhouse gas emissions at the same time that we are enabling a revolution at the user and consumer level to maximize efficiency and integration of cleaner resources? That's the paradigm. And unless you have a leadership strategy that the market won't organically provide, we're just going to end up in a bickering argument of my stuff versus their stuff.
So we'll see tomorrow night if Bob Lutz includes that national energy strategy as part of his recommendations for the next president in the closing session. Andrew?
Yeah, I would have to agree with what Andy said, especially, again, just some of the observations that I've made in China over the last several years. I was in China 13 times last year, helping a lot of our portfolio companies find partners and funding sources in places like China, India, Southeast Asia, and elsewhere. And if you look at the way that the Chinese have done it, again, out of desperation, out of the need to maintain social order. It's been a very systematic way of applying a lot of government pressure to a lot of the companies that are generating a lot of the emissions that have been hurting the country, as well as putting private and public partnerships to create massive funding sources to be able to deploy these types of projects. If you, as an example, one of the companies that I'm on the board of is called LanzaTech. LanzaTech has developed a technology that can convert waste gas that comes out of factories biochemically into valuable fuels and chemicals. Companies out of Chicago spent years trying to find partners in the US, trying to get government support and funding behind it, and they were not successful. We couldn't get the Pittsburgh steel mills to work with us, couldn't get the coal-fired plants up and down the Mississippi to work with us. We went to China with the help of one of our advisors, Tony Blair, and got introduced to a number of folks like Bao Steel and Capital Steel, two of the largest steel makers in China that were getting a lot of pressure from the government to figure out what to do about their waste gas. A lot of economic and political pressure on that. As a result, these two companies ended up entering into joint ventures with our Chicago-based company to commercialize the technology first in China. So they paid for pilot plants, tens of millions, up to 100 million into proving that the technology worked. And the moment that we were able to get good data on it, SK, Mitsui, Siemens, ArcelorMittal, a lot of the global players started to rally around it. And now our first commercial plant will be in Brussels. So it's a good example of the type of thing that China, again, whether it's soft power or hard power, they have been able to deploy massive capital resources behind building the solar plants, building the wind farms, supporting the commercialization of new technologies because they're desperate for it. And I think to Andy's point, it's that type of leadership around putting forth policy, regulatory, and capital stores to be able to support these types of technologies that we need in the U.S. in order to be able to get the same type of speed and rapidity of deployment.
And China, one last comment on China, that they're actually focused on nuclear as well. So China is looking at, they deployed a lot of wind, a lot of solar. People view China sometimes as what they were doing 3 or 4 years ago and not what they're doing today. And you'll hear stories of wind farms that are spinning in China and not connected to the grid. Well, they're now connected. They were not connected for a year or two. They might get some things that didn't quite work out well, but a lot of that gets solved and they move on. They're very focused, and to Andy's point, they are the closest to having a very consolidated policy through their 5-year plan. So they actually do have, what to do, when to do it, how to build it, how to think about it. And but I want to come back to one last piece on networks and how this all works. Think about the internet a little more. People don't know whether it's IBM mainframes or Sun servers or brand new Dell equipment or HP that's running this. It's all of the above. There's a bunch of old stuff, there's new stuff, there's middle-sized stuff. And that's the way our grid is going to be. It'll change a lot. You're going to have more injection in different places, but it needs to be more dynamic. It can be more dynamic. Doesn't mean the grid is, the grid is just copper wires. It's the switches and the intelligence that's embedded throughout the decision points on the grid that manage power that are changing and need to change. And then the sources, we can accommodate a lot of flexibility and a lot of variability if we get smarter about this. And that's something that's very, very doable.
I know
today.
it's almost interesting that, and this all gets done at the state level, in many places at the utility commissioner level. And I just often find myself thinking about the type of talent we have that we're putting into those roles. I mean, this is one of the critical regulatory decisions and challenges facing, our country. And it's like, we got to give these folks some support in terms of thinking through what are the regulatory models, what are the rate structures, how much data should we make available to private companies so that they can be the innovators, not just the, incumbents. There's just a lot of tricky stuff happening there, and not totally clear how to solve that.
Yeah, and just to add to the network point and distributed versus centralized, in using storage as the backdrop, because I do think there's a lot of exciting technologies and developments there that are interesting. Bringing that analogy to the internet, if you think about 10 to 15 years ago when YouTube first came online, centralized storage of a lot of the video data gave way to CDNs that created this distributed network of different pockets and caches of a lot of the video content so that you, the user, could get the information faster. Well, in storage, we're seeing the similar type of paradigm developing. On one hand, you've got a lot of the great folks that are developing innovations on top of the lithium-ion platform, which was originally designed for consumer electronics, not for the grid, right? But a lot of the modifications to lithium-ion to make that suitable for centralized large grid storage, and Elon obviously is doing a lot to try and make that happen. You've got a lot of the non-lithium, kind of the next generation types of technology that are longer life or cheaper or more cost effective, safer to implement. And then you have a lot of folks that are trying to create the CDNs of storage. So folks that are trying to take current lithium-ion technology, working with folks like Lynn to be able to create distributed models for storage where you can aggregate, smaller battery systems in lots of different places, maybe at the community level, and use software to be able to stitch them together to create the same type of effect. So I think there's actually a lot of really neat things that the clean energy industry can learn from the internet industry in terms of how networks were developed and built. And there you might be able to get, you don't have to pick either or. It doesn't have to be centralized or decentralized, but really interesting options on both.
Let's talk about financial innovation. Property assessed clean energy was one of the biggest things, Lane, that happened in solar to unlock financing. There's been a lot of talk recently about REITs as possible investing structures. There's some changes that have to be made there about what's real property. There's the MLP Parity Act that's been stuck in Congress. So let's talk about financial innovation, starting with Lynn.
I think the financial, the market's there. I mean, we have project finance investors that want to invest in this. To me, it's the regulatory certainty is what we need, is the regulatory framework. The private capital will come in. I think in our history since 2008 when we started the company, we've raised well over close to $3 billion. And just recently, even when people are saying there's no appetite for this, we just closed on a $250 million debt line at 4% for very long-term debt, 15 plus years. That was way oversubscribed. We can expand that. There's a lot of people looking for the yields in this type of industry. What they're afraid of is like what happened in Nevada to us, where we get a government sort of bait and switch. They welcome you to the state, and then they totally, change the policy and don't even protect your existing customers. That type of issue is really what's hurting, I think, the capital coming in, because people like the asset class returns, the equipment works, people pay their bills. They'll be there if we have the certainty.
Andy Karsner, that's a tough problem because there's a couple thousand PUCs in this country that could all do that bait and switch. It's very decentralized. Yeah. It's hard to get a consistent roadmap for the capital to come in.
So yes, you're absolutely correct. And I want to address both the first part of your question and that comment. This is unequivocally the place where the Obama administration, with its remaining time left, could exercise the most leadership at the least cost to the greatest effect. Okay, and so leaning into the near impossible, highly politicized priorities of how to have the EPA assert executive privilege and regulation and everything else, that is going exactly where the catalyst of that led it into a 10 to 20 year fight of adjudication in the courts that we can all speculate on panels like this for the next 2 decades. Fine. Done. Check. Boom. go to the fundraiser, collect the check. Next item on the list would be to have the Department of the Treasury allow for more REITs. To my mind, they've only allowed Hannon Armstrong to be a sustainable green infrastructure REIT. So there you have a successful model with private capital, publicly listed, doing enormous good, but we're gating them one permission at a time from the IRS. Every man for himself, one letter ruling at a time, right? So we've gotten one across, and that's all, okay? And then on PACE, okay, which has grown enormously organically of its own ability in California, the federal government is fighting them, capping them, issuing rules to disable that to occur. So this is actually someone somewhere, if you're out there and you can hear us, anywhere in the bowels of the White House, calling and convening the Treasury Department and saying, we want PACE, we want sustainable infrastructure financing, and we're going to back Chris Coons and bipartisan legislation and get MLP parity.
Well,
but this
it's
takes
Freddie and
leadership.
Fannie. That's the problem, right? They're protecting Freddie and Fannie.
It's pretty. Freddie and Fannie have such low clout in Washington, given their enormously prominent role in their last great debut in 2008. It should be pretty easy for a White House this assertive to make some calls and get its way on this issue. Again, very low cost. So why it's not happening, I don't know. Maybe it doesn't sell at the fundraiser weenie roast as popular as the other stuff.
And there is this MLP Parity Act that's Murkowski stabbing out bipartisan support. Andrew Chung?
My wife and I get to see the president next week, and we'll tell him everything you said. Everything you said at the White House. I'll come to the MLP in a moment, but I think there's a broader question around this, and it relates back to the topic at hand, which is how are you addressing the clean energy funding gap with different types of financing structures, whether it's REITs, MLP Parity Act, and so forth. And bringing this back to the China question and the global question. The investment structure that I believe needs to be created, and I'm trying to create with 1955, is the ability to invest in technology or companies in the US and Europe that can be brought to China, India, and other places for initial deployment, and use the money from those countries to be able to support the development of these technologies and for commercialization for the rest of the world. With 1955, in a 3-month period, we were able to raise $200 million to launch the strategy, with significant capital coming from Asia because of the desperation of a lot of these countries to be able to support this type of technology flow. And so this is one small example of what could be a much, much larger opportunity from an investment standpoint. So if structures could be created or funds can be created where you can tap into the great innovation, the great companies that are are developing models for doing renewable energy, for carbon reduction, pollution reduction, wastewater treatment, et cetera, if we can tie a lot of the ingenuity of the West with the survival-driven demands of the Far East, with the capital stores there, I believe that type of investment structure is what it's going to take to be able to solve this big funding gap issue, or at least be a big contributor to that. Coming back to MLP parity, I think that that is one interesting model for doing this type of investment here, but again, it's limited to much larger projects with very steady cash flows, and it's not necessarily going to be breeding innovation. It's not going to breed innovation. It is going to be an important part of scaling larger and larger versions of what we already have. But if you're talking about the next generation of solar technologies or storage technologies, LEDs, carbon reduction, and so forth, MLP is only helpful in the latest stages. What we need to figure out is how to get things that are new commercialized. And again, I think matching the West with the East and bringing the capital there.
But this is, again, this is if and, not if or, right? There are different places in the capital stack for different reasons, right? Yeah. And I would put much less premium on the need for what you just referred to. In other words, it is necessary, it is good, it is virtuous. I'm a person who invests in that space, but it is not constrained for a dearth of capital, right? The more capital, the better. Okay, but that is not the area that has been most impinged. Commercial innovation and development and investment in R&D has proceeded very well and very significantly for a decade. More would be better, granted. But where we are lacking is our capacity to scale and hit inflections for that which we are trying to solve for.
I don't agree with that, Andy.
Well, but
I don't agree with that.
So then the question is, I know that's a Bill Gates argument, which is I get the voila moment, I get the killer fusion machine, and then I don't have to worry about this climate change stuff. Okay, I'm actually much more concerned about a flow, a pipeline that looks like a spout at the end. And the question is, how much can you broaden that spout in scale to begin matching the incumbency mathematically with a problem you have to solve with greenhouse gas emissions in the atmosphere, right? And so just taking so I'm for all the bets, right? I'd love the fusion machine. I'd love the commercialization of the new innovation. But saying one at the cost of the other.
I'm not saying that. I agree with you on the need to have large funding expansion in all parts of the capital stack. I absolutely agree with you. I think the MLP Parity Act is great, and I'm glad that it's there because it helps further the technology that has already been developed. But if you look at a lot of the different studies that are out there, if you take all of the technology that has already been developed and you extrapolate how that can expand over time, it is not going to be sufficient to be able to solve the overall problem. As a venture capitalist, I'm looking at earlier stage technology innovation that are the moonshots, the thing that could be 5x or 10x better. And I will absolutely challenge the point that sufficient capital has gone into that area.
I didn't say sufficient. I said that it wasn't as in need, right?
I think it's absolutely in need. Right now, if you take a poll of the 1,000 venture capital firms that are being tracked by the NVCA right now, how many of them are investing in clean energy innovation? How many? So how many are doing that? And so if you're talking about how many of them are investing in social media apps and e-commerce apps, O2O, and all the buzzwords, SaaS, there are 1,000. So right now, in my world, I am trembling because I'm worried that there's not enough innovation going into.
It's really important to note that they relate to each other.
Yeah,
you need to there's a reason
agree.
that people are having a hard time investing in the early stages because it's broken at many parts. And so we're a big investor in renewable projects, but we'll be the first to tell you it's a kludgy system. It's not an efficient system.
Right.
There are 15 major providers of tax. We manage it through the tax code. It's not the way to run a system. It's very inefficient. There are not that many sources of capital out there that will do it. Every time a solar team wants to go raise money, they have to find somebody who will sponsor it. There's no syndication. There's no liquid market. We need MLPs. We need REITs. We need more efficient financing structures so that you're not just stuck with 10 to 15 providers of capital. And with that, you also open up markets. You open up ways for entrepreneurs and VCs to make more money, to connect the dots. So I think they're related. And I think in a way, you guys are, you're both right, but we need more money in both categories, but you're not going to get it in the first without the second.
We need money everywhere,
Well,
or vice versa.
Thanks for the fight. It's been fun.
No, but it's not a fight.
Please help.
It's drawn the parameters. I mean, I think there's an implicit assumption in what you're saying that the VCs are the best source of that catalytic new innovation investment in commercialization.
that.
Well, except for
It's
I'm
the
senior
source that I know the
strategist at
best.
X, and we do a few things on moonshots of our own.
Yeah.
And I'm not sure that and if you told me, oh my God, what are we going to do without the LPs, and we got to go struggle around and do some debts, or maybe we should hook up with the U.S. government because that'll speed us up. That is not actually where our mind is on the moonshots we're investing in at X. And I know that and at MIT Media Lab, that's not their mindset. And so there are lots of other competing pockets of innovation aside from the VCs, which were brand new to this game a decade ago, right? And those other pockets of innovations are accelerating. So there are some great VC interested people like yourself, Andrew, but the track record would suggest for a large part of them that there's a reason that capital doesn't go to them and is moving to other places. That's not tantamount to saying that area is not being covered. But I got a question for Lynn, which is, with existing technology, with all we know today that is available or immediately available to deploy, what about Andrew's assumption? Could we get there? Can solar take us where we need to go?
Big question. I know my market. So let's talk about distributed and what place that could play. And I think it's a lot more significant than people think. So if we, NREL did some research on this where they said if they just took all the rooftops, commercial and residential in the US, how much of our power could be supplied. It's 40%. In California, it's 75%.
On existing technology.
On existing technology, existing rooftops, cut for appropriate sunlight, et cetera. So it's more meaningful. It's more meaningful than you think, and that's the point I wanted to make, because I'm kind of living in like the pragmatic world right now, duking it out on the ground, you know, making this happen. And to me, the problem, the finance is an issue, but I still think it comes if we fix the regulatory thing. I mean, pragmatically, how all this stuff is being played out right now is that consumers are overwhelmingly wanting rooftop solar. But what's happening is their home is using 70% of the power. 30% of it is flowing back to the grid. How much do they get paid for that 30% that flows to the neighbor's house? How much should they get paid? Should they get paid at the wholesale price? Well, that doesn't make sense, because the utility is going to pay them, 3 cents, and then charge that same customer 12 cents? That's what happened in Nevada. And so we need to figure out, and that's what's stopping consumers to adopt. So you have more pace. If consumers are afraid, okay, the utility commissioner is just going to decide, instead of paying me 10 cents for that power, now all of a sudden it's 2. Who's going to buy? Who's going to adopt? We have to fix that problem. That's the challenge, and I think we are. I mean, the good news is in many states, California, New York, Massachusetts, we're all thinking about this, and we're making the right decisions. We're moving more to time of use type rates. Let's actually let the market sort of decide. You know, when is grid at peak? You know, 4 to 7. Let's figure out how we actually charge the appropriate amount for what the true strain is and supply and demand on the grid. And that's what we need to move to, is some certainty around that rate structure to give people the confidence to make the long-term investment.
So we need to deploy what we've got. We also need innovation. Andrew Chung?
Just to answer one of Andy's comments, and by the way, I have to say that when I first started in the clean tech biz, Andy Carstner was one of the guys who gave me time, and I have always respected everything that he has taught me and said. One thing, however,
With all due respect.
No. Well, I just wanted to answer one point that said, yeah, a lot of folks have failed in this area. I mean, it has been, a bloodbath in a lot of the, whether it's venture, PE, whatever, in investing in clean energy. So who cares? Why are we even still thinking about it? Why am I still doing it after 11 years, right? I think the thing that has been missing, in my humble opinion, the thing that has been missing is that it's been too US-centric of a mindset. So a lot of the venture capital firms, they've invested in a bunch of this stuff. They hope to scale it up. They hope to get government support. And then they realize that, boy, I'm not getting it. And so how am I going to keep raising money for this when I think about trying to just deploy in the US? I think the way that you make it work is by having a global mindset, by bringing, whether it's early stage technology, developed technology, large types of solar or storage deployments of existing technology. If you have a global mindset and you help these companies build bridges to places like China, India, Southeast Asia, Africa, Middle East, where they are desperate for it, where there is a significant amount of capital that is available, and they are, trust me, I've brought 12 companies to China to build bridges there, and every time I've brought them there, there's a line of mayors, provincial governors, even the premier is interested in hearing about it. And so that, in my opinion, has been the mistake over the last 10 years plus of a lot of the clean tech investing, and that needs to change. And again, that's why I'm betting my career on doing this on my own. One other point about just the technology innovation and existing or new. Again, I think that we need to invest in existing technology. MLP, larger private equity or project finance, we need to do more of that. But if you think about yesterday's lunch, when they were talking about the future of humanity, imagine if every one of those speakers told their companies that, guys, for gene editing, let's not worry about gene editing. Let's just use the existing sticks and shovels to fight the healthcare battle. Or with Watson, AI existing, good enough. They were talking about what's going to happen in 2030 and 2050. All of those speakers. And if we want to think about our industry, right now, lithium ion is the battery du jour. It was designed for those devices. They have bad cost.
A lot of lead acid too.
Lead acid batteries, right? These things don't have good lifetime, they're not safe, and the costs are way too high. So we can keep using it. We can keep using sticks and shovels to try to battle this as we head towards 2030. But my bet is that if we can find ways to help the scientists and the developers of these next generation technologies find a way to get their things into reality, it's going to create a revolution. And we absolutely need to support that.
Andrew, a lot of headlines this week, cover of Bloomberg Business Week is about the transition in Saudi Arabia, $2 trillion sovereign wealth fund. Could that be a big source of capital, if not maybe not innovation capital, but in terms of getting to this 44 or 33 trillion, whatever it is, how about the sovereign wealth funds as a big source of capital?
Absolutely, whether it's the Middle East, China Investment Corporation in China, the Malaysian folks, the Singaporean folks, there is a lot of money that is in these sovereign wealth funds, and for them, it's not just a pure investment. They're not just driving towards financial return. They're trying to save their people. They're trying to do good for their nation. And so again, trying to find ways to build bridges to these places so that you can get access to the capital, but doing it in the right way, I think is very critical. From a lot of my experiences in working in China, and I'm lucky to have grown up speaking Cantonese and Mandarin Chinese, and so I can transact. I have a cultural affinity to the Chinese. If we were trying to get Middle Eastern sovereign wealth fund money, a lot of care and thought has to be taken into how you can bridge the cultural and language gaps. So American technology company that wants to get access to that, or large-scale solar developer that wants to get access to that, you need to have people on your team that can bridge that gap. And if you can, I think it's a massive opportunity, and it needs to happen.
And a lot of American companies who went into China early swaggered, and this is the American way, and they they lost their shirt, basically, a lot of them. Lynn, I want to ask you about green bonds. $37 billion in 2014, kind of flattened out. We haven't talked about green bonds. It's not going to be innovation capital, we understand, but is that going to be an important source of capital?
Don't know. I would defer, maybe you know, Andy.
Well, I just sat in the session with the VP of the IFC, and his answer is yes. I think there are different flavors of green bonds. There isn't a uniform rule as to what green bonds are, so a lot of it depends on who the sponsor is, what the terms and conditions are around it. I personally would like to see more convening and more collaboration across the many repositories of innovative financing, and I would like to see a common moral currency that is not just somebody's flavor du jour of this is my product, this is my green bond, this is my social bond. I'd like us to dial it back right to natural capital and begin accounting for everything in the way that we sort of think about electrifying vehicles. We analyze that on a well-to-wheels basis. How much are we avoiding from the taking it out of the earth all the way to the wheel of the vehicle, to the emission, to the tailpipe, and really holistically. And I'd like to think about the way we deploy what we're calling virtuous money, green bonds, very similarly. So where are the resins coming from in a wind turbine? How much arsenide is being used in a solar panel? How are we affecting the Earth footprint and the material inputs of all the things we're doing on a holistic basis? And I'd like to see those that are most interested in innovating new financial products begin to come together, whether it's the International Finance Corporation or Goldman Sachs. And right now what we have is a virtuous hodgepodge and patchwork quilt of people with good ideas testing them out in various pockets. And to begin to aggregate it in a way that can address closing the energy investment gap, we need more people talking to each other about creating a currency across that describes the attributes of how money flows.
Let's go to some of your questions. We have 10 minutes left. We have one right here. Let's get up. We have some mic runners. Please wait, and so that the video will capture your question.
Thank you. To what degree do you guys feel that the Sun Edison bankruptcy plays into this conversation? I mean, what's the significance there, if any?
Lynn, we talked about this earlier.
I don't think too much. If you look at the U.S. energy right now, 50% of coal capacity is in bankruptcy. Over the last 2 years, 120 oil and gas companies have declared bankruptcy. So that's 50 billion of debt that's in bankruptcy essentially. Versus one high profile, yes, but one in solar. So I think by comparison, things look pretty good. I think on the margin, it makes certain things a little harder. Credit committees a little more scrutinizing, but I don't think it'll have a material impact.
Question here.
Hi, I'm Charles Chase. I manage the Revolutionary Technology Programs Group at the Lockheed Martin Skunk Works. And so we're one of these folks developing one of these fusion machines, compact fusion, hot fusion, that really changes the game. And but there are also other things that are more speculative from a physics standpoint. Fusion is, in my mind, like a engineering problem, right? The physics is understood. We need to do the engineering. There's more speculative things like using dark energy or the quantum vacuum that really changes the whole story. And I really kind of agree with you that there's not enough investment in those sort of out there, who knows if that's going to work, when are you going to return money, but if it does work, it changes all of humanity. So how can we, and maybe it's just a constraint on based where I am, that I don't see that sort of funding and support for that kind of stuff. So can you provide any sort of thoughts about that?
Well, let me just clarify
Space
first.
cowboy.
Let me clarify because I misunderstood. I think I misunderstood you, and then you sort of went on to endorse MLPs and bigger long-term things. So I think we actually agree it's if and. It's both of these things, right?
Absolutely.
And when I was responsible for the federal applied science portfolio, I doubled the budget, by more than $1 billion, and we inaugurated clean tech. Not enough, and we put the loan guarantee program, a back-end thing, sort of into law, right? Still not enough. So I'm a very big advocate of all those early stage innovation investments and research. So I wasn't ever, I want to make it clear, I'm not ever saying it's sufficient. I was actually just saying on a relative basis of need and where the need is more acute for scaling things, I think there's a false choice between it's either the moonshot, which I love, I'm all about moonshots, okay, or it's scaling existing technologies. And I think that false choice is a corrosive debate that has begun to, even so that it's been implied up here, when I think we actually agree. We need far more mechanisms, and here's a place where national strategy, indeed global strategy, as Andrew has pointed out, is absolutely fundamental. This is an indispensable role of government to occupy that place in the capital stack where private money can't go or won't go. Brilliant stuff at Lockheed Martin, but even at the end of the day, there's going to be some analyst from some Wall Street firm in his third year trying to impress somebody of saying that's just drag weight on this quarter, right? And so to get around that reality for things that are fundamentally longer term horizons that are necessary, we have the same pressure at X that Skunkworks has. We've got to have bigger strategies from external collaborators, from national and global leaders that are endorsing and augmenting those early stage funds and helping have what we have in the tech sector more purely, roadmaps of saying this is where we're going, where we have to go.
Let's have a question here.
Sorry, can I?
Quick.
Yeah. So I'm all about the Star Trek technology. All about it. And in fact, 1955 was named for Bill Gates, Vinod Khosla. They were both born that year. Albert Einstein died that year. Eric Schmidt born that year too. But I think if it actually relates to where those sources of funding may have to come from in the near term. If you're talking about dark matter, fusion, these really long 10 to 20 year development cycles, you will have to go to the Bill Gateses of the world, or the Vinod Khoslas, or the Elon Musks, or Eric Schmidt. And there was a group that was recently formed called the Breakthrough Coalition, which is in the earlier stages of a group of billionaires and a group of families around the world that understand that this type of innovation needs to happen. And frankly, very few normal institutional sources can provide it. And so look on that list of people and talk to the family offices, the groups that have a bit more flexibility around investing. I think that Andy and the DOE have done a phenomenal job with the ARPA-E program, which is specifically around investing in very speculative, research-based, early-stage types of development opportunities. So I think there are sources out there that are going to be non-conventional, and you'll have to be very entrepreneurial in finding investment for that. I think where, again, you will have to overcome some challenge is once you get that basic research sort of lined up and done, the question is how do you get that to the piloting stage? And that funding gap, I think, is difficult. And that's where, again, having a global mindset, finding folks around the world that potentially could be involved, I think would be advisable. But good luck. I'm a big supporter.
Yes.
Hi guys, James Joaquin from Obvious Ventures. Yesterday, Oracle spent about $500 million acquiring O-Power, a leader in energy efficiency. And as we race towards this abundant, inclusive, clean energy future, how do each of you think about energy efficiency in the solution stack?
It's tremendous. I mean, California, first of all, identified it as the #1 element to focus on in the loading order. They've done a great job policy-wise, and it's had an order of magnitude more impact than all the renewables. So it has huge impact at very low cost. and it kind of creeps along. Sometimes it's a lot of small decisions. It's not always as obvious how people are going to make. Sometimes it's GE making money because they do something 10% more efficiently or 20% more efficiently rather than a breakthrough. O-Power was an interesting company because it started to open people's minds up and customers' minds up to think about it. And I think that behavioral element was really critical. And I think that, but efficiency has delivered more than almost any other category and needs to continue. Now, there's some risk here because everybody who is counting on getting to 2 degrees centigrade is counting on energy efficiency showing up with 400 quads of energy. It's a big number, by the way, of efficiency. And if it doesn't show up, then we have to do even more solar, wind, nuclear, CCS, whatever people can come up with. So it's a really critical part of the equation, and we need to keep pushing it. High pricing, like Germany's an interesting experiment in efficiency because they got very high prices now. So you're getting a lot more focus on efficiency in Germany just because of the pricing. And that might be one of the best gifts they give through this, what they've done in the past is you're really pushing efficiency significantly now because you got a strong price signal.
The street lights out here are funded by Citibank. They've $44 million to the city of Los Angeles to put in LED lighting. They save 50% annual savings. It's like a win-win. They get, the city gets money, the bank gets business, we get more efficient light. It's just a local example.
Maybe one. I have one comment. I think how.
Sorry, quickly.
I'll finish fast. Where I think this can happen on the consumer level really powerfully is when we get to a place where we can go to a consumer and say, I'm going to manage your entire energy bill for $200. You want the $100 program, you want the $150, you want the $200 program, and we manage it. So how comfortable do you want to be? We put sensors on the different devices, and that's where I think it can be adopted really powerfully on the consumer side.
Let's give a thanks to this fantastic panel for a lively discussion.